What's up, gang? Quick heads up before we head into the video. I just want to let you guys know that this video was recorded about a month ago. So you're going to see some older trade data, older price information, but the concepts, of course, are still the same. So stay tuned for an update as Coinbase has moved about 100 points since I made this video. But for now, enjoy this video on the covered call strategy. What's up, traders? Zach here from the Trading Network. I hope you guys are doing well. Today, I have a very different video than basically every single video that I've ever posted on this channel. So strap in. Today, I am going to be talking to you guys about how I earn essentially passive income with very simple technical analysis skills using the same exact strategies that I use to intraday trade futures to collect money by selling options, which basically pay my bills and then some every single month. What I'm going to be showing you guys today is called the covered call strategy. Now, how I implemented this particular covered call on Coinbase is a pretty interesting case study because I got in at what appears to be, at least at the moment, at a very opportune time. So what a covered call is, very simply, is you are selling calls against shares of stock that you already own. So in order to implement this exact strategy, you will need at least 100 shares of any stock. And you can test this strategy out by using paper trading on Thinkorswim. You can test this strategy out by using really cheap stock, like finding a stock that's, $1, $2, $500, whatever, and getting a feel for how this strategy works. So what I did is I put on what is called a vertical call spread on Coinbase on April 7th. And April 7th is right here when after we had that nice sell-off and came down and tested the lows from September 2024. This is a daily chart on Coinbase, okay? And I'm not going to get into too deep of detail what a vertical call spread is, but essentially it's betting on price escaping a range. I bought a bull call spread, which basically means you can see down here, I notated, I bought the $150 calls and I sold the $160 calls, which basically means if price moves above 150 and above 160, I will collect a certain amount of profit based on how much I bought that spread for, right? So once again, I'm not going to get too deeply into the vertical call spread, but a call option in general, for those of you guys not familiar with how options work or what calls are, is it's basically a contract that gives you the option to purchase shares of whatever stock you bought the call from at a particular strike price, right? So some would say that I timed the market very well. Some would say that I got lucky. Some would say it was a combination of both. But I entered right here at these prior lows, this vertical call spread, when price was right around 150. And all I needed to get max profit was a move above 160 and price to stay there until the expiration. So I'm going to just look real quick here. I bought the May 23rd vertical call spread, and I entered this position on Monday, April 7th. So essentially, I was betting that Coinbase was going to close above 160 or be above 160 by May 23rd. So I gave myself almost 2 whole months for Coinbase to get it together, put in a base, and move up. And you can see that Coinbase ended up moving above my 160 strike price very quickly, within a day or two, right? So again, I'm not going to go off on too much of a tangent, but I just wanted to kind of provide some color here in what I did. So I basically had a capped risk, capped profit strategy enacted here. And what I did was, once Coinbase started to move up, I mean, it was already in good shape, within, I don't know, a few weeks of putting on that trade, Coinbase was at $210, right? So I got a very significant move. And what a call option does, just to be clear, when you buy a call option, like I said before, you have the opportunity, or the option, if you will, to buy the stock at that price. So if I buy a call option down here, if I buy a 150 call option down here when Coinbase is around 150, and it goes all the way up to 200 or even 250, where it is right now, I can then go back and I can exercise that long call option. That exercising of the call option allows me to take ownership of 100 shares of Coinbase at that 150 price, no matter what price Coinbase is at. So let me be very clear. I bought Coinbase at 150, or I bought calls at 150, okay? And then price moved up to 200, 200 plus. And then I said, wow, it would be really nice to exercise that long call option and take ownership of 100 shares of Coinbase at a cost basis of $150. Now, there is a little bit of a caveat to that, as technically my cost basis is $150 per share plus whatever price I paid for the option, which is about 20 bucks. So technically my break even after exercising this call option or these call options was about $173, right? So it's strike price plus premium, as you can see here, 150 strike plus the premium that I paid, and that gives me a roughly break-even price of $173. So I'm getting on to the covered call, but I am just providing, once again, more color so you guys can try your very best to understand what I'm talking about so you can take advantage of it. So to put very simply, I exercised this call option last week on May 14th, okay? Or actually almost 2 weeks ago. All right. And when I exercised, that gave me ownership of 100 shares of Coinbase per contract that I have. And that then gave me basically instantly $8,000, $9,000, $10,000 of profit for every 100 shares that I owned. Okay. So if you guys are following here, I bought the vertical call spread, right? And that happened on April 7th. Okay. Then price started to rip almost immediately after I got in. This is a daily chart once again. And I watched and I waited. And something very awesome happened the second week of May. Is it was announced that Coinbase got added to the S&P 500. I mean, I was speechless when I saw that, especially, knowing that I had this vertical call spread, right? But when I had that vertical call spread, I was like, oh no, if Coinbase keeps going up, my profit is capped. So I have to do something. I have to, if I want to take advantage of holding that Coinbase and taking ownership of 100 shares per options contract that I was holding, I had to basically remove the downside coverage, right? So this short 160 call is basically what caps your risk, and it also caps your profit. So on April 7th, I put on the vertical call spread. On May 14th, right? On 5/14, that's when price ripped up. We gapped up after the S&P 500 announcement. And I was like, okay, this seems like a potential generational play. This seems like a potential wealth building play. And I could be wrong. Coinbase could come back down and, come back down to the bottom of the range, and the S&P 500 excitement could wear off. And that's okay, because I believe in Coinbase as a company long term, and I want to hold as many shares of Coinbase from as low as a price as possible. So I am absolutely okay with holding Coinbase from a cost basis of 160 or 170, right? Which is my current break-even price on the shares. So what the covered call strategy allows you to do is it basically allows you to own shares, right? And it allows you to take profit on those shares without actually selling them, okay? So I hold at least 100 shares of Coinbase. That means I can sell a call option against those 100 shares and collect what is called premium. You collect premium by selling options. Very simply, let's say that I believe price is going to stay below 270, okay? So, and you can do this without holding shares technically, but we're talking about the covered call at the moment because that is the safer, more catered to beginners. Selling naked options is dangerous, especially if you don't know how to cover and you don't know what you're doing. But for example's sake, let's say I think price, for the next week is going to hold below 270. I can then sell a 270 strike call, okay? And then I collect the premium that I sell that call for. So it's basically a way to collect passive income. Selling options is a way to collect income without really doing anything other than selling the option and waiting unless you have to cover, right? So in the example that, price started to work back above 270, then I would have to either close, this short option or cover or, manage my risk, set a stop loss, etc. But essentially, if you use technical analysis to your advantage and find a resistance area that price is likely to stay below for a certain amount of time, then you can sell options at that strike price and you can collect money as long as price stays below your selected strike. So let me show you guys real quick what I did. So you can see right here, I bought the 4 contracts of verticals, right? That expired on May 23rd, 150, 160. Then I took profit on those verticals when I was basically at max profit. See, they had doubled in value almost. And that was my max profit for that vertical spread. So I didn't want to exercise all 4 contracts. I wanted to, in this instance, only exercise 2 of the contracts, which would give me 200 shares of Coinbase that I could then sell call options against and collect weekly income. All right. So I know that this is probably a little confusing for those of you guys that are not familiar with options, but try to bear with me here. Okay. So here are the 4 verticals that I bought. Then I took 50% profit when I was basically at my maximum profit for that options position. All right. Then what I did was I bought back the short call, 1 more short call, which gave me then 2 150 Coinbase calls that I was long on, and then only 1 short call. Okay. My goal was to exercise 2 of my long contracts to give me 200 shares of Coinbase that I could then sell call options against. Then what I did when I saw the market starting to stall at the beginning of this week is I found 2 different strike prices that I sold call options against. Now, to keep it very simple, you guys can see here that I sold 1 weekly that expires on June 6th at the 275 strike price. And then I sold a 270 call at 650, right? Both expiring on June 6th. A very simple way to calculate your premium is to multiply the premium by 100, right? So by simply selling this 1 short Coinbase call that expires on June 26th, I will collect $810 in premium just for that 1 contract by basically doing nothing. So as long as Coinbase stays below 275 by next Friday, I make $810 by doing nothing. Now, I sold another one because price started to sell off even more, and I sold a lower strike price because I wanted to try to capture even more premium. So with this, as long as Coinbase stays above below 270 by next Friday, June 6th, I will collect $650 from this, right? So that is a total of basically $1,400, right? For doing nothing, just looking at a resistance area and saying, hey, this looks like sellers are stepping in here. I'm going to sell these call options and try to collect some premium, collect, $1,400 for the next week because it looks like the market is meeting resistance, right? So theoretically speaking, you could hold shares. You could hold shares and add to your position indefinitely, literally forever. You could pass your shares of whatever you're holding down to your kids or your grandkids. And you can sell covered calls. You can sell call options against these shares of stock that you own and collect weekly, bi-weekly, monthly, quarterly income. And yeah, you have to know technical analysis. You have to be knowledgeable about if price is, moving back up. You want to take off your cover so that you can, not lose the profit on the stocks that you're holding, right? Because if price goes up, if Coinbase goes up, my stocks are going up, right? I hold 200 shares of Coinbase, right? So I'm up like, I don't know, $20,000 on my Coinbase shares. And I can basically collect, conservatively $800 to $1,000, moderately $1,000 to $1,500. And if I wanted to be even more aggressive, probably $1,500 to $2,000 per week by simply owning the shares of the stock and selling calls to collect premium as price just hangs out, right? Now, you wouldn't want to sell calls on a breakout. The idea is to use technical analysis, right? So we're going to go back to our chart here, and then we're going to see, you know, this is a very clear resistance area. There's a reason why I sold the 270 strike price and the 275 strike price. This is clear resistance, right? If we start to break above here, we're probably coming to like 300 plus. So if we start to break above, I will, you know, close my calls. I'm already up like, I don't know, $800 in 2 days or something for literally doing nothing. Price just sitting below 275 essentially. So I'll monitor the market. I'll set alerts. And if price starts to creep up, then I'll close my calls. And then I will be naked long, or I will be 100% long exposed with my 200 shares of Coinbase. So I know that options are confusing, or they can be confusing. And as Mr. Eric Crown used to say, options are 1 degree too complicated for most people to want to learn, but they're really not complicated. You know, like you just got to take a little bit of time to learn what the Greeks mean. You got to take a little bit of time to learn what long and short calls mean versus long and short puts. And, you know, there are so many wealth building strategies that you can use in combination with your futures trading. You know, think for a moment about a scenario where you make, you know, daily income, you make daily cash flow on average with your futures trading, right? And then you take the profit from that futures trading and you start to build a long-term portfolio. And you find companies that you are confident in, that you believe in. I believe in Coinbase. I believe in Tesla. I believe in Nvidia and AMD and plenty of other companies that I think are probably not going anywhere anytime soon, right? So I want to own as much of those companies as I can and hold those for as long as I can. I don't want to trade the shares. That's not really my vibe. I want to hold the shares, and I want to build equity in those companies and in the shares that I own. And then I want to sell call options against the shares that I own and collect income without having to ever take profit on my shares. I am not kidding when I say that I am planning on handing down, or, you know, giving somebody my portfolio when I'm gone. The goal is to build wealth. And I love futures trading. I love intraday trading. I'm going to be doing it for a long time, but I think it's very important to have a bigger picture and some longer term goals and a zoomed out perspective. And this is a strategy that, yeah, you guys might not be able to buy 100 shares of Coinbase at 250 or 150, right? It's not cheap to use to do it on this particular name, right? But there are a ton of stocks that you can try this with. You know, like this is just my watch list that I have, and you guys can scan these and enjoy, because there's some a little bit of alpha here, perhaps. But like, look at this company right here. Okay, daily chart definitely not looking so hot, right? So potentially not a good technical analysis example, but like find a stock that's cheap, where the chart looks good, and, you know, buy 100 shares and then sell a call option against it and watch how it works. Or like I said, use paper trading on Thinkorswim and get a feel for it. And this is, in my opinion, one of the best ways to build wealth strategically, intelligently. And, you know, this part right here, like the vertical call spread, that's complicated, right? You can literally just buy, I could have bought 100 shares down here, or hundreds of shares down here, whatever, and then started selling call options against them, right? And tried to wait, ideally, like this is a pretty clear range. So you want to try to wait until price meets a very clear resistance, ideally a higher time frame resistance. You know, this is like weekly, 3-day, daily resistance, etc. But this is how I got into this position, right? I didn't just straight up buy shares. I bought a vertical call spread. Then I closed the short leg of the vertical call spread. And then I exercised the long leg of the vertical call spread, which gave me ownership of the shares. So a little bit of a complicated, more advanced way that I got into this particular equity position with Coinbase. But I am really, really happy about it because, you know, the chart looks good. I'm looking for a breakout above 270 for a retest of the 300 area. And, you know, we're not super far off, 100 points, less than 100 points from price discovery time. And this is an asset, once again, that just got added to the S&P 500. So by definition, this is going to be in everyone's 401k now, right? So pretty good bullish case, whether you know, it ranges around for the next 6 months, or it takes off and, you know, breaks that 300, 350 resistance. Who knows? But I am, you know, I'm a believer in crypto in the long term. I'm a believer in Coinbase as a company. And, you know, even if they face adversity, I'm still going to continue to add to this position, right? Because I don't think Coinbase is going anywhere but up, generally speaking, for a very long time. And I will just support this thesis by pulling up a monthly chart of the NASDAQ, right? Like, I mean, you know, let's look at SPY. I mean, pretty good chance. Monthly op zone, been slapping since before I was born, basically, right? So I think that I have jam-packed this video with plenty of information. I'm sure I'm going to get a lot of questions because I've never made a video on options trading before. But I hope that you guys find this interesting. And I hope that you guys will try this out, whether it's on a paper trading account. You literally have nothing to lose testing out how covered calls work on a paper trading account. You also, for those of you guys that watch my videos that are already a little bit more familiar with you know, options trading, that have a bigger bankroll, you can sell naked options. Just to be clear, you can sell naked options, and that means you have uncapped risk, right? And it can be very dangerous to sell naked options, but if you know what you're doing, it can be incredibly profitable, and you can basically collect passive income. You can sell naked puts, right? Selling a put, just to plant the seed real quick. Selling a put is bullish, right? So let's say you sold a put, a 175 put. You make money as long as price hangs out above 175. You sell a 270 call, then you make money as long as price sits below 270. And you can also create ranges. You can sell calls and sell puts, and you make money as long as price stays within that range. And that's another strategy that I will talk to you guys about in another video if I get enough positive feedback from this first options video here. So just to be clear here, and for transparency's sake, I'm going to show you guys my exact position. This is a live account, connected, real-time data, live account on my Schwab account. And here's my position, right? I own 200 shares of Coinbase from a cost basis of $150. Current price at today's market close was $259, putting me up $17,222.68 on just the shares. And then you can see here I have my sold 270 call, sold 275 call. Sold the 270 call for $650, which means I collect $650 in premium as long as price expires or price stays below 270 by next Friday. And at any time, I can close these and take profit, right? So I'm up 262 on this one. I'm up 522 on the 275 call, and I could just close these and collect that $700. And you know, I sold these on Tuesday. Or I sold them on Monday, and it's Wednesday, right? So I made, you know, almost $800 on these two sold calls in 2 days by doing nothing, just looking and saying, this is a resistance. I think price is probably going to hang out below here until or unless we break out. And boom, $800 in my pocket. I could close, sell more options, rinse, repeat over and over again. And, you know, this is how one way that I pay my bills. You know, you can literally just collect shares in good companies, sell options against them, and pay your bills with passive income from the markets. So you can see here that here are my totals. You know, I'm up $18,028 in this particular little Coinbase setup right here. So 100% transparency, live account. Just wanted to show you guys this as well. Okay, so I just wanted to pull up the bingo board, the options board, if you will, to give you guys an idea of how this would work. So the premium is already cooked on this 275 strike price, right? I sold this earlier today for like a strike price, or for a price of $650 or something like that, which meant that, you know, I'm going to collect $650 from this one per contract as long as price expires below 275. But time has moved on, and as time decays, it's called theta decay. As time moves on, the option becomes worthless, right? An option that is out of the money, aka below the strike price, becomes worthless as time goes on. So I make the most money when these options become worthless. So the idea of selling options is you sell them for the highest price you can, and then as time goes on, the value of the option decays, and then you reach maximum profit once the option is worthless. So I'll show you here. All you would do here is click sell, right? And just to be clear, now I would only earn, between $280 and $293 for selling this call because time decay has happened already since I sold that option, right? So like you want the premium more juicy. If you're selling options, you want a higher premium so you can collect more. So you basically have to find the balance of looking at the chart and saying, okay, well, we have a resistance area at 270, 267 and a half, might be a little bit more aggressive, but I can collect an extra, $50 to $100. Is that worth it? No, I'll be safer. I'll go out one strike. I'll sell the 270s, collect 395, right? So I sold the options at the right time. So I'm collecting, 800 plus from one, 600 plus from the other for a total of, $1,500 in a matter of a week. So just to be clear here, you can see the price here is 280. If I was to sell this one option, here is the stats, right? I would make a maximum profit of $280. My break-even price is $277 because I am paying, $3 basically for the option. So price could come all the way to $277, and that is where I would be actually break even. That's where I would not make any more profit. And then if price went above $277.80, that's when I would start to actually lose money on this short option. But as long as price stayed below $277.80, I am making money and the option is decaying. And by next Friday, I am collecting $280 from simply just selling this option and doing nothing and letting price just hang out below $277.80. Okay, so that is a quick example here of how you would actually sell the call. This is what the options board looks like. And I will, if I get, good enough feedback, I will do some more options videos and show you guys what's up. So I know this was a very new topic for the channel and probably for a lot of you guys. I know a lot of you guys are just sticking to futures and have never traded options, but the markets have an incredible amount of opportunity. And I'm not suggesting to drop futures trading and start trading options and trading covered calls. But like I said earlier in the video, there's an ebb and flow. You can make cash flow from your futures to then build a long-term portfolio and create more sources of income, more streams of income. Selling options against my stock, selling options in general, trading options in general is another source of income for me. And selling covered calls is a very laid back way to collect passive income from the markets. So please let me know if this made sense. If it didn't make sense, I will help in any way I possibly can to make it make sense for you guys so you can take advantage of this too. And if you guys do find value in the content that I am posting here on the channel, I would immensely appreciate it if you would like, subscribe, and click that bell notification to be notified every single time that we post videos here on the Trading Network channel. And please, if you guys have any questions, hit me up in the comments down below. Hit me up on Instagram. You can shoot me a friend request on Discord. My Discord name is zfelds, F-E-L-D-S. And I'm not going to teach you how to trade options in the DMs, but I will help any way I can within reason. And I really appreciate you guys as always. So please let me know how you feel about options trading. If you've ever put on a covered call before, if you're curious about covered calls and other options trading strategies, please let me know and I will keep pumping out the content. So thank you a million times. I appreciate you guys very much, and I will see you in the next video.